Oil prices slipping today. Crude and Brent each down more than 2%. Concerns over an economic slowdown weighing on the market. For more on where oil prices are heading, we're joined by Tom Kloza, OPIS Global Head of Energy Analysis. Tom, always good to see you, sir. So what is dragging oil down? It was just 3 weeks ago on the heels of that OPEC production cut. There were people talking about a return to $100 barrel. What happened?
Well, I think demand happened, and demand is quite weak. It's lower than last year for gasoline, and gasoline wasn't spectacular. We're using about 365 million gallons a day, and normal would be probably around 390 or so. So there's some questions about whether we're going to see a driving season. And demand for the rest of the barrel, diesel in particular, is very soft. You had some people in the earnings side this week, I think at JB Hunt mentioned it's a freight recession, and I think that's a problem.
Tom, what does that really signal, though, just about the broader economy? You mentioned what we just heard from JB Hunt president saying that we are in the midst of that freight recession. What does that tell us just about where we stand, more so speaking, for the broader economy?
It seems to suggest that the folks who believe that we're going to move into a recession or something feels like it are probably spot on. There's a sense that you're going to have pent-up demand for driving. But, check the hotel prices these days. The price of gasoline will be a lot cheaper than last year, probably $1.50 or $1.75 cheaper than last year. But the price of hotels is very, very high. So disinflation is at work in the oil patch, but not necessarily everywhere else in the economy. And we're not flying as much. We think that probably jet fuel demand will go higher. But there's a lot of oil out there, and OPEC Plus has a real problem. It's hard to root for them, but they have a problem in terms of stabilizing prices for the rest of the year.
Indeed, very hard to root for them. You mentioned that freight recession. What's the impact on diesel?
Well, diesel's down about 9% year over year in the United States, and it's probably down even more than that in the European countries. And in Asia, diesel is probably trading for only about $10 or $12 a barrel above the price of crude. And in the last year, refiners who've been making diesel, they've been getting $25, $35, $40 a barrel in terms of the margins on that. So it's going to give them a little pain. But I don't think we'll have to host telethons or have ice bucket challenges for them. They'll do okay.
Yeah, Tom, I guess a lot of people out there, a lot of investors are trying to gauge that pain that some of these refiners could potentially see, at least in the short term. How much pressure do you see on their margins, at least over the next several months?
I think they're going to do well. I do think margins are coming down. But look, the first 100 days of this year represented the best first 100 days ever for refiners. It's come off since then, and it may continue to back up. One of the problems is that people thought that Russian oil wasn't going to get to the market. It's getting to the market. As a matter of fact, Russia is probably stealing business for us in diesel in Latin America, particularly in Brazil. So that's one of the things that a lot of people didn't count on.
All the factors you mentioned, shouldn't the reopening of China have more than made up for that in terms of demand?
A little bit. I think people got a little too hyped up about the reopening of China. There was a point there, if they scraped the big data, that they thought that jet fuel demand was going to be higher than it was in 2019. But now they look and they see that a lot of flights were canceled. So I think China's going to reopen. I think it's going to use more oil than it has been, about 16 million barrels a day of crude oil. But it's not the panacea for the world's ills right now. And you look at the market, and this is happening in the context of financial markets that have kind of moved higher for most of 2023. If we get a debacle in the financial markets, it will definitely have collateral damage in oil.
So here we are, Tom, today at $77 a barrel here for oil. Where do you see that figure being during the summer season when we know it's so critical here for drivers?
Well, a couple things on the summer. Number one, I think between now and the hurricane season, we've seen the highs for gasoline, and probably we're going to be somewhere between $70 on crude and maybe $85. Anything above that, you start to see a lot more shale oil come out. Gasoline prices, there's 20 states this afternoon where if you want to do it, you can find gasoline for less than $3 a gallon. the average prices don't move very quickly. They move at a glacial pace. But I would submit that last Wednesday, when we got to $3.80 or 68 cents a gallon, that's the top of the market until hurricane season. Hurricane season, very susceptible to any kind of tropical weather in the Gulf of Mexico. And I'm in Fort Myers, so we know what tropical weather in the Gulf of Mexico is like.
All right, Tom Kloza, great to have you. Thanks so much for weighing in here. Again, crude sales closing just around $77 a barrel.